Good morning, everyone. You are in the Pill Method Club, and the room is how to pay off mortgages in 7 years, but not just mortgages. We're talking about all debt, and we're doing it in a way that most people have never even heard of. We're going to focus on how to eliminate up to 75% of your interest cost, not your interest rate, but your interest cost. And why is that important? Because if all of your loans were 0% interest, there'd be no financial advantage to paying the loans off early. So what do we focus on? We focus on how much it costs to manage the loans. For 88 years, we've been paying way more interest than we need to, about 75% more than you need to. Guess what, folks? With your current budget, you can pay about 75% less interest, pay off all of your debt in an average of 7 to 9 years, and you don't have to. Here it is. Wait for it. You don't have to sacrifice lifestyle. You can live well and manage your debt. Oh my goodness. And the interest saved, you can invest that into your family and grow your wealth with that interest saved. My goodness. Jared, how are you this morning? I can't wait to get into this information.
Yeah, likewise. I'm doing really well. Hope everybody's doing well. Also, we're in the Pill Method Club. This is, in my opinion, one of the most important rooms on Clubhouse because we're literally shifting generational wealth with every single room that we do, with every person that gets pinged into the room. It's really life-changing information because basically you're going to be able to see amortization schedules, amortization charts, interest rates versus interest costs in a whole different way. And it's kind of like back in the slavery days. It was illegal for slaves to learn how to read because once slaves knew how to read and they actually understood the opportunities and the access that they actually could have, they would revolt. This is the same thing with the pill method in the banks. Once people know about the pill method, they'll never pay their mortgage. They'll never pay their student loans, their car loans the same again. And they're basically going to lose 75% of interest payments you would be sending out, and you're going to gain 75% of that interest cost and redirect it into your kids' inheritance, into your investments, into things that make you feel happy, like vacations, etc. So definitely click that greenhouse at the top. Make sure you follow the Pill Method Club. And then when you do so, read the about description. That's a nice little Cliff Notes version of what the Pill Method is and what you're going to experience today. This room runs for 2 hours, and the 2 hours goes by really fast. So if you want to get on stage to ask a question, I highly recommend getting on stage as early as possible. Never fails. Last 20 minutes, we'll have 6-7 hands raised, and we want to make sure that you get the information that can shift your 2022. So with that being said, we're going to do some quick moderator introductions, and then we're going to get into the content. So again, make sure to raise your hand and come on stage. And also, we're streaming this on Facebook, LinkedIn, Twitter, and YouTube. So for those that are watching this on the streaming platforms, welcome to the Pill Method Club as well. Please share this room with your colleagues on whatever app you're on. And also, if you're in the chat, feel free to write in a question as well. We will prioritize you with the Clubhouse room and make sure that Don actually fills out your example live on the screen. And if you're in Clubhouse and you want to see this live on your screen, you can just run over to a laptop, a desktop, or an iPad so you can see this in big on a big screen. Type in ice10klive.com, choose either YouTube, LinkedIn, Facebook, or Twitter, and you'll actually be able to watch the examples live on the screen and the numbers and the calculations, while if you'd like to come on stage and ask a question at the same time. So with that being said, Don, I want to give you a quick chance just to kind of set the stage for the room. And then I'm going to have everybody do a quick 30-second introduction. Since we got a larger stage, if we can make it more like 20-25 seconds, that would be dope. So Don, I'm passing it back to you.
Well, listen, Jared, right now,
You're on mute right now. I had to mute you. Give me a little feedback.
All right, hold on. Thank you, sir. Listen, I would love to be able to turn on this new feature, Jared. I'm still trying to figure all this, stuff out. All you millennials doing this thing, and you're trying to teach me. I do appreciate you being here. So if you give me a little advice on how to turn on the new feature, I would absolutely look at there. Be the first to chat. Jared, you are on it. I'm telling you.
Yeah, so I want to teach you how to fish, right? So here's what you do.
Okay.
Future. You go to the upper right hand corner where the three dots are.
Yeah.
And you're going to see the second option that says enable room chat. Right now it says disable room chat because I
Uh-huh.
enabled it, but you can be able to enable it right there.
Oh, right there. Good. Listen, man, you are awesome. See, he knows how to do all this stuff. In fact, he knows the founders. I mean, how often do you guys eat dinner? Twice a week with the founders?
With the founders of like Clubhouse?
Yes.
Yeah. Not yet, but I'm getting there.
Okay. Listen, folks, my name is Don Daniel. I'm the founder of P.I.L.L Method International, a better way to eliminate debt. And P.I.L.L stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. When you understand these four banking principles, I mean, understand the basics of it, you will understand why we don't need to pay interest like we've been doing since 1934. Oh my gosh, it's only 88 years. That's it. What we're doing is paying way more interest than we need to. Why? Because we don't know the rules to the game. I guarantee you, by the time we've finished here, if you can't listen to the whole thing, make sure you listen to the replays because you will learn how to read an amortization schedule. You will know how not to give all that money to the bank. And you'll also know that this system is very complicated. And even though we talk about a simplified way of understanding it, it is very complicated. And this is why we've developed a fintech, a artificially intelligent, cloud-based computing system that runs all of the numbers and tells you exactly what to do. Here's how we do that. We will let you know how much money to pay. We'll let you know what month to pay it in. We'll let you know what day of the month to pay it on and which loan to attack so that you can know how much interest you're saving and you will save the optimum amount of interest that's mathematically possible for you. You don't want to just save some interest. You want to save all the interest you can with the budget you have. And when you do that, folks, you'll be surprised at how much you can save. And then you can stop spending your children's inheritance on interest. Back to you, Jarrett.
All right, all right. And yeah, I had a question about how to share the room. You see where the number 7 is and the circular arrows, you just click that. And then you go to the top where it says share on Clubhouse. And then from there, you can type in a statement, some emojis, or if you just want to, you can just click share. So you see the number 7 just went to number 8. All right, that was me. All right, cool. So let's go through some quick moderator introductions. And while we're doing so, please make sure to raise your hand, come on stage. This room is really great when it's interactive. Plus, you'll walk away from this room with a different strategy for your student loan, your car loans, your mortgage, refinance. If you have a critical moment where you're thinking about buying real estate or you're thinking about interest rates, definitely worth it to come on stage. He'll probably say to you or make you, all right, so my name is Jared. I've been on Clubhouse for a minute, do a lot of rooms. If you'd like to see the type of rooms I do, just click my bio and just browse my replays. If you'd like to be in the room doing this replays, feel free to give me a follow and check me out on my other social media platforms at jarrett10k.com. And you can follow me on Twitter, LinkedIn, as well as Clubhouse. Up next, we're going to go to Kenyatta.
Good morning, good people. My name is Kenyatta. You can find me at kenyatta10k.com. I am the official of this house, the P.I.L.L Method Room, as well as a broker in the states of Illinois, Florida, and Georgia. So what that means is I can help you find deals, finance that deal, and I can help you cancel the interest on those deals so we can get you yet another deal. So tap in with me if you need to. Great to be here. Happy Sunday.
Hi, everybody. I'm Tiffany, the Y CEO. I cannot believe it. On the 3rd, it'll be my 1-year Clubhouse anniversary. I'm really excited, guys. I've been able to give some amazing value and met some great people on this Clubhouse app community. I'm in the high net worth multi-use commercial property development space. I've been doing this over 20 years. I've also served in many capacities throughout the community on different organizational boards. And I can tell you, continue to follow this house because you will always receive more than what you bargained for. We also have a $1 billion deal that we brokered here in Cincinnati, and we are changing our community for the greater good. Because if you're not giving back, then what are you doing? And I'm also now the bank. Oh my gosh. I'm the bank now, guys. I am now a certified funding broker. I attended the play by Ms. Cooper and Mr. Jonathan Bing, and I can tell you it is everything that they say it is. So I'm also a certified executive business leadership coach, and I help CEOs and leaders of corporations scale their business and do it in a very efficient way, automatizing, building a proper framework. I'm a very mathematically inclined individual. That's kind of how my brain works, because if I can't see the end from the beginning, we got to go back and we got to lay it all out and outline it, make sure it makes sense. And as a financial freedom advocate, I also changed the law in the state of Ohio at the Supreme Court level. And I connected with some amazing powerhouses in legislation and also in law.
Don's having an issue, so we're working that out on this side. He's actually restarting his computer real quick. If you can hear me on Clubhouse, just let me know real quick, and I'll go ahead and do. Okay, good, perfect. I'm Kirk Nugent. I get to serve as your producer for this show. If you've ever wanted to put your message out there in a broader fashion, getting it to way more people, allowing people to see what value you have to offer, and you've never thought about how live video can play into that scenario, definitely would love for you guys to tap in with me at kirk10klive.com. I do all things live video strategy, live video marketing, and live video coaching. So whether you want the easy button to be able to have somebody come in and do it for you, or you want to do it for yourself, just want to learn, or you have a team member that you want to get trained up, definitely tap in with me. Would love to be able to show you the power of live video. kirk10klive.com. That's me. Thank you.
Happy Sunday. My name is Valerie Sears Jones, and I'm in the great state of Texas, and I am all things real estate. We are successfully always helping buyers fire their landlord and become the lord of their own land. We work with investors and sellers also to help them liquidate assets and acquire many others. If you also have a credit challenge and you specifically are trying to purchase a home, I am here to assist you. You can find me at valley10k.com.
of domestic abuse. And I have learned that your mind, your mental health determines your wealth. I was one at one point in life when I chose to get out of that relationship, my marriage. I did not even have enough money to purchase Happy Meals for my small children. And it's because of my mental earn seven figures. And so we help you learn how to heal from traumas that are holding you back. We teach you how to set healthy boundaries, and we teach you how to apply your faith to the healing process. So again, your mental health is your wealth, and you have to make sure your mental health is in alignment so you can live the abundant life that God has for you. So thank you for allowing me to share, and I yield the mic.
All right. Last but not least is 10K cars, and then we're going to go to LaShawn. Thank you so much for your patience, LaShawn. And anybody else that wants to come on stage, feel free to raise your hand and come on up. 10K, please introduce yourself.
Super good morning, family. How are you? It's always good being at the family table and being one of those family members that is here not only to add value, but to see how we can help to build each other. So I'm here looking forward to a beautiful session as usual. I'm done in terms of breaking down how we can save on interest and actually help to build our family's income and grow generational wealth. With that said, back to you, Jared.
Wait just a second. Who was that was just speaking? Because that certainly wasn't 10K with that low energy. Who was that masked man?
You see, I'm not trying to scare the audience down. I just got up. I'm trying to gently ease my way in. You know what I'm saying? That's it. No, guys, look, it's always good being here, man. I'm just here. I'm going to start off by listening done, and I'm going to pop in correctly. Sounds good?
Sounds good, man.
You got it, brother.
All right, so let's get to the fun stuff. Let's get to the content. So thank you to the 11 people that shared the room. LaShawn's about to ask a question that's going to really help everybody get what the P.I.L.L method is, and it's going to break it down on screen. So we'd love for you to click that number 11, and let's make that 20, 25, 30. Share this in the hallway as Don is about to answer this question. And also, if you want to see this on your laptop, your iPad, or your desktop, feel free to run over there right now. Go to ice10klive.com. Choose either the Twitter, Facebook, YouTube, or LinkedIn option so you can see these numbers live on the screen. And any questions that come up, feel free to hit the chat feature, and we will see your question in Clubhouse as well as on the streaming platforms. All right, LaShawn, you have the floor.
Hi.
Hi,
LaShawn Brown. And
hi, LaShawn.
I didn't have a question. I was interested in just joining the room to learn more. I'm a real estate broker in Chicago, and I do housing education and advocacy. We host the Chicago Housing Expo, and I spend much of my time around prevention of displacement and housing, as well as to increase buying power of the community at large, in addition to just individuals. For Black and Brown people, I'm all about shared ownership and having the power to be able to engage in finance and real estate activities that we normally could not do as a singular unit. But I could. There are many questions I have in my head, and one of them is, I guess, what would be the first step for someone to begin the process of removing their debt or tackling that debt in a faster way?
All right, LaShawn, first of all, I have to introduce you to Kenyatta, who is also a realtor.
Hi, beautiful.
In Chicagoland.
Yes, I just followed you on Instagram. I'm basically gonna stalk you now because our purposes are so aligned, and so I would love to attend the Chicago Housing Expo, and we have many things to discuss. So I look forward to connecting with you.
Oh, awesome!
Oh, listen,
looking forward to.
I'm trying to get to as many networking opportunities as I can. So make sure we share that information as well, Kenyatta, okay?
Absolutely.
Excellent. So, Ms. LaShawn, are you able to, are you close to a computer or a tablet so that you can actually see our examples?
Yes.
All right.
And
And if you would go to ICE, that is Interest Cancellation Expert, ice10klive.com,
okay.
and then you can choose which one you want to see. You can choose Facebook or YouTube. YouTube is probably the most popular. I'm trying, actually, LaShawn, I'm trying to grow my membership on YouTube. So if you want to go there, that'd be fantastic.
Okay, you got a new member.
All right, thank you. So can I've got a new client that's coming on board. I can't tell you where they live right now, but they do have a multi-unit building that's $700,000 at 5.25%. Are you seeing that on your screen?
Let me get that set up.
Okay.
All right, we have that on screen now.
Okay. So are you seeing that on screen now?
I am not. I'm at it took me to a 10,000cards.com.
Yes. And what you want to do is watch us on YouTube. Just click which one you want.
P.I.L.L Method Live on YouTube.
There you
Got
go.
it. Okay.
And then you should then click on the one that says live.
Okay, it's showing a lot of different channels of where I've been. I'm sorry, I'm on my iPad and I'm
That's okay.
not that versed at it. I don't want to.
That's okay. That's okay. We can listen, we're going to be here for 2 hours. All right.
It should take you right to the YouTube channel, and then right at the top there.
And
Pill
we
Method
actually
channel.
have a brand new link that would have taken you right there. I forgot to give that to you.
Oh, I have it here. How to pay off mortgages in 7 years.
Yep. And you just click on the one that's live.
Okay.
Episode 46.
Got it.
You got it?
Cool.
All right. So here's one of the things I want to talk about, and we'll go through this. And then if you will help me, LaShawn, now what you see on the screen is going to be a slight delay between what you hear and what you see. Okay. So I'll just remind me and just say, Don, it's not on the screen yet. But we have $700,000 at 5.25%. 5.125, a 30-year loan, and the payment on that is $3,811.41. And so what we do is that we help our clients focus on interest savings. Now, this guy is cash flowing on this thing like crazy. All right. So the payment is way less than the rents he's receiving on this. And prior to this, he was just satisfied with that. But after hearing me and reading my book, he says there's something here that I haven't been paying attention to. So here's what we're looking at. I'm scrolling down to the summary. And when we see that the principal borrowed is $700,000, and the bank wants him to pay $672,107.60. $672,000 in interest on this loan. So that my first question to him was, is 672,000 5.125% of 700,000? He said, no. I said, you're right, because it's 90, the total interest paid as a percentage of principal is 96%. 96% of what he borrowed, the bank wants in interest, but he wasn't paying attention to it because his tenants were paying for his building. So I asked him next, how much, when you receive your rent checks, how much of that money is yours at the time you receive it? He said, all of it. I said, well, how much of it do you want to keep? We're putting a new spin on this. So if we could keep more of that interest money, would that be a good thing, Ms. LaShawn?
Absolutely.
Absolutely. So listen, we're going to be going back and forth here. So here's what we're going to do. We're going to take a look at payment 1 through 12, and I'm going to start out with this question. I have a very good investment I want to tell you about, Ms. LaShawn. And with that investment, I want you to put your money in for 1 year, And all I'm asking for is about $45,000. Okay, about $45,000. So if you can put together $45,000, give it to me. I make sure it gets invested correctly. At the end of 1 year, out of your $45,000, all you'll have left is $10,000. That's it. I'll return to you $10,000 and that's all. Do you want to invest with me?
That's absolutely not.
Absolutely not. Okay. So, so I need you to take a look at line 12 on this amortization schedule. This particular gentleman was making a lot of money on this building because his rents he was receiving is way more than the mortgage payment. But if we take a look at line 12 and column 3 and column 4, we've got cumulative principal and cumulative interest. At the end of 1 year, he will pay this loan down by $10,000, but he will pay $35,640 and a penny in interest. Added together, that's $45,640. So he's got to pay $45,000 out just to get $10,000 in equity. Isn't that about the same thing I just talked about?
Yep.
So let's see what we can do about it. So let's take a look at what happens when we understand how amortization actually works, because the same rate in which we are charged, we can save at that same rate once we know how all of this works. So on payment number 1, we have $821.83 going to principal. And how much goes to interest?
I'm sorry, I can't see the screen at the moment.
Oh,
So,
okay. Are you using the same listen to Clubhouse and trying to watch the screen on the same device?
no.
Okay.
For some reason, it didn't go to the live.
Oh,
I thought it was live. It was a previous live one.
okay. So yeah, go out of that and make sure you go to the one that's live.
Okay.
Yeah, we'll wait for you. It's not a problem. You're helping us this morning.
Oh, well, I'm glad to know that.
Yes.
While I'm meandering my way through. So I'm how to pay off mortgage in 7 years. I'm back on there. And I don't know where to find the live.
It'll have a red button on it.
It says live.
It just says live. Yeah.
Select live. Okay.
And make sure you turn the volume down on your iPad.
Okay. And I am on the screen and I see my name.
Okay.
Yep, I got it.
You got it. Okay. So you see now the $821.83 in principal.
Yes.
All right. And all right, make sure you turn the volume way down on the iPad because I can hear myself. We're going to get a lot of feedback here. So, and how much in interest?
$29.89 and 58 cents.
How fair is that?
Almost $3,000 of that payment.
Yeah.
Is interest.
And this guy's making money on this building. He never really looked at the interest cost. He only looked at the interest rate, but he never really looked at the interest cost. Do you think this is something we should start paying attention to?
It's something we should always pay attention to.
There you go. So here's what we're looking at. So let's say we start this. He started his payments in January. And when he did that, $821.83 is subtracted from what he owes. And now, after giving the bank the $29.89 in interest, he now owes $699,178.17. The bank uses this number to determine how much interest he pays on line 2. Okay, or February. All right. And then the difference goes over to the principal, so the payment remains the same. A little more principal, a little less interest each time. So if we make our January payment, we don't owe any more money until February. Is that correct?
That's correct.
So
It's a monthly
February's,
amortization, right?
yep. And February's principal payment would be how much when February rolls around? Just the principal payment.
$825.34.
Now, here's
Almost
my
$4.
here's my question. Do we have to wait till February to give the bank an additional $825.34?
No.
If we had it, could we give it to the bank in January?
Yes.
And if we
This is this is daily amortization, correct?
no, this is for the, I've got it here for this is every month for 12 months.
Okay.
Okay. Actually, you can go all the way down to 24 months, is what I have on the screen. Okay. All right. So here's what we're talking about. So this is month one, and we made our mortgage payment in month one, and then in month two, you told me, or February, the principal payment would be $825.34. My question is, and you said you don't have to wait till February to give the bank that $825.34. So let's say we do. If we do, no interest comes out of that $825.34, correct?
That's a principal payment, correct?
That's a principal payment. Okay. So that means we have to subtract that from what we owe too in the same month. So we're paid down to $698,352.83. We're paid down to the month two on our amortization schedule, aren't we? Okay. And so that would mean our next mortgage payment for February would be on what line of this schedule?
It would be on line 3.
Exactly. So we would be paying in February our regular mortgage payment, but it would be $828.86 and $2982.55. So look what happened. We got rid of payment number 2 on our amortization schedule for only $825.34. Payment number 1 is now touching payment number 3. Look at that. Now here's my next question. The interest payment on line 2 of $2986.07. What happened to that?
Well, it went away.
It went away. We never have to pay that. Isn't that amazing?
That is.
That's
a huge saving for one payment.
Yes.
That's a huge saving.
That's a huge savings. So listen, if we were to do that, let's say we were to make our mortgage payment here, and then in January, and gave the bank the next 3 principal payments on top of our regular payment, we would knock out these 3 interest payments, wouldn't we? Nearly $9,000 in interest we never have to pay. How amazing is that?
That is awesome. I never thought of it this way.
All right. So now if we did that, our next mortgage payment would be on what line of our schedule?
Our next mortgage payment would be on line 4.
We're already on 4.
Oh, okay. So we would be on line 5.
Exactly. So payment number 1 would be touching payment number 5. We save a whole lot of money in interest, but we give the bank exactly what they're looking for in principal because that's the money we borrowed, but we choose the timing. We use the bank's timing. We got to give them nearly $3,000 each month. But when we use our own timing, we can give them that money and we don't have to pay them that interest. How about that? Now, let's get to what you were talking about. How can we understand how we can pay off faster and cheaper? Every real estate investor I know has money set aside for repairs. This particular real estate investor had about $60,000 set aside for repairs because he doesn't only have this building, he has other buildings. but this one is just a multifamily building. Here we go. So I said, you know what? Let's take a look at this amortization schedule of yours, and let's go down to line 12. And at line 12, you would pay down, if you just follow the bank, of the bank system, you would pay this loan down by $10,096.91 after 1 year. It says, yeah. And I said, do you have to pay the bank this money in 12 monthly installments, LaShawn?
No, you don't.
If you had it, could you give it to them in one installment on line 1?
Wow. Yes, you could.
And if you did, would you be paid down to line 12 in 1 month?
I'm still trying to count how much money I'd be saving. That's almost third. That's about $35,000.
Yes. So we're gonna get drilled down just a little bit deeper here. So here's what I asked him. I said, you have about 60 grand in the bank, waiting for something to go wrong. And he always felt good about having that money around because he always had the cash to take care of stuff. But it was sitting in a bank account making 1/10 of 1%. He was making a lot of money elsewhere. That money sitting in the bank just didn't come to mind. It was just there. Okay. So I said, what if you were to borrow some of that money from yourself? Uh-oh. Borrow $10,096.91 from yourself. That would leave you about 50 grand in the bank to take care of what you needed to take care of, and apply it to this mortgage. Knock out all of these payments, and you move this from point A to point B in 1 month. Okay. And it wouldn't cost you $35,640 and a penny to move it here. It would only cost you the interest on line 1, $2,989.58. You just saved right here. Here it is, $32,689.87 by borrowing $10,000 from yourself and applying it to this mortgage. It was been.
I have a question.
Come on with the question, Kenyatta.
I have a question for those who are worried about prepayment penalties and things like that.
Yeah.
What would you say about that?
Well, I can't talk about prepayment penalties right now, Kenyatta, because you haven't invited the new people to see this on the screen. As soon as you do, I'm in.
Okay, you guys want to see this. So this is how you get to see the examples on the screen. You want to go to ice10klive.com and you want to choose between Facebook, Twitter, LinkedIn, or YouTube how to view these examples. But don't stop there. Don't forget to share this information with people with that share button on each of these platforms. Happy viewing.
All right, we're up to 11 shares in this room. Listen, folks, if this information is life-changing, if it's interesting, if it has any power at all, we should have, since we have 74 people in the room right now, we should have closer to 70 shares. Hit that we got 17 shares right now, 17. Let's get it up to closer to 70. Hit those circular arrows right there. All right, we're getting up to 18. Thank you so very much. So I'm going to finish this thought, Miss LaShawn, and then we're going to talk about, because when we're talking about real estate investors and getting using bank funds to fund our projects, some of these, because of how they're structured, some of these loans do have prepayment penalties. And so we're going to talk about that. But isn't this amazing? If we could give the bank the $10,000 when we wanted to and save $32,000 in interest. How was that?
That's incredible.
And we're getting equity at a much lower interest cost now, aren't we?
That's almost no interest if you pay off a year, 11 months in advance.
Yes. So aren't you glad you got invited to our room today?
I am. To be honest, I know you can pay off your mortgage and, or your
Mhm.
loan
Yep.
and accelerate it and things like that. But to hear it in these terms and to see it on the amortization schedule really makes it real. It makes it makes it so much more reachable. You don't even have to be that. I am not. I would not consider myself the most disciplined person,
Hmm.
but to be able to just go and grab and this is a larger payment. So just a mortgage for
Hmm.
just a regular middle class individual, and to make that pay, just to go realizing that you're probably only paying $135 a month towards your principal,
Wow.
and you have an extra $1,200. You take your for example, you take your tax return, it's
Hmm.
tax season,
Hmm.
and make that payment, you have just saved yourself like probably $10,000 for the year or
And
more.
that is the thing. We need to focus on not how fast we can pay down the loan, but how cheaply we could pay down the loan. It gives it
Yep,
a whole new spin, doesn't it?
it does. It really does.
All right. So here's the thing. Here's the last thing I talked to this um, investor about. I said, now you have a, a certain percentage of your income from the rents that you're putting away in your reserve account already. All right. Now he's already established that. The rest of the money goes towards um, investing in other properties. He didn't want to touch that. I said, oh, don't have to worry. Based on the amount of money that you already have going into that extra account, that reserve account, how long would it take you to pay back the $10,000? He said 5 months. So, Miss LaShawn, in 5 months, could he do it again? And in 5 months, do it again and do it again and do it again until he's either paid off on the building in about 5 to 7 years on commercial buildings, or look at this. I'm going to scroll down to what if he wanted to take out cash out refi $100,000. I'm down to payment number 99 when it catches up. If he wanted to cash out refi $100,000, the way he was doing it before would take 99 payments, and how much interest when it catches up down to line 99 to cash out $100,000, but he would have paid how much in interest to do that? Do you see it yet? If you're talking, you're muted.
Oh, $276,329.
So here's my question, folks, to all you real estate investors who see that they have $100,000 in equity, but you had to pay $276,000 in interest to get it. Do you really have equity? Do you really?
Your mortgage servicer does.
That's a clip right there, folks. Here's what we're talking about. So if we could do this on a regular basis, all right, using monies that are sitting dormant, all right, maybe we could get that $100,000 for like $75,000 in interest instead. That's like $200,000 in interest savings to acquire the same asset, isn't it? Folks, we don't have to keep looking at paying interest as the cost of doing business the way we used to. We can save so much more. He could give that $100,000 at about 70 grand in interest instead of 270 grand in interest. And then take a look at that interest savings, and then we could invest that as well. Mr. Sean, does that kind of answer your question, how we go about the basics of paying off a loan early, but knowing what you're getting when you do?
Yes, that's another level,
Okay.
because I see that as another asset. This savings is truly an asset.
Mhm.
It's moving that money from the red side of the ledger to the black side,
Come on.
and it's an asset.
And I love the black side in more ways than one. So here's the last thing I want to talk about on this today. So if we can continue to think about this, what if we could find out how much interest we're saving per dollar? I mean, we can drill all the way down now and take it down to the unit cost. If we can save a certain amount of interest per dollar, we can optimize that so that we can always know that whenever we pay something towards a loan, we are getting the biggest bang for our buck. Did you realize that, let's say, if you knew that you were saving about $6 in interest per dollar applied, would you ever want to save $3 in interest per dollar applied?
I would try to save the most per dollar applied,
Right.
starting with that. Just prioritize. That's
Exactly.
what my frame of thought would be.
But what people don't realize is that when you pay too much towards an amortization schedule, the amount of interest you could save per dollar starts to go down. You start to violate the law of diminished return. This is why at the P.I.L.L method, we have a cloud-based, artificially intelligent computing platform that runs all the amortization schedules for all the properties that you own, even if it's 1 or 20, doesn't matter, and then helps you to determine how much to pay, what month to do it in, because you don't pay extra every month, what month to do it in, what day of the month to do it on, and which loan to attack. So not only are you saving interest, but you're saving the most amount of interest per dollar applied. That's what our computing system does. So that's why we're here. That's why we exist. So people can save the most amount of money that they possibly can at a much lower interest cost. And now they can invest that money too. Ms. LaShawn, you have helped us out greatly today. Thank you for bringing your question.
Oh, thank you. This is tremendous. I'm just trying to figure out when I can get your book, and I'm going to subscribe to all your sites and share. And I want you at our next Chicago Housing Expo.
All right. Well, listen, I will be there. Okay.
With that being said, Don, I'm going to sponsor her P.I.L.L method book.
What?
Oh, thank you.
Yes. Can it be autographed, Don?
Yeah, I'll make sure that happens.
Yeah.
I love autographed books, especially by Black authors. I only buy Black books in print. All the other ones I buy digitally.
All right.
I know that.
Come on, we're gonna get there. And now that we, Jared, would this be a good time to talk about the book, or did you want to go someplace else?
No, let's go ahead and do it. Go for it.
All right, folks, listen. We're going to put this up on the screen, and right now, as of last weekend, the P.I.L.L method book went to #1 again on Amazon. Oh my goodness! Out of 33 million titles on Amazon, there's only one book that talks about what we're talking about today: how to save the maximum amount of interest per dollar applied. I got a letter today. It was early this morning, and a person says, I thought by reading the book, I was going to know exactly how much to pay and what day to pay it on. The book doesn't go there, folks. What the book does, it lets you know that just paying extra is not enough. It gives you the basics of why it is a very complicated system, and what we've been told in the past isn't good enough. 9 out of 10 people you know will never pay off a mortgage because we are guessing at how much to pay. We're guessing at when to pay. We're guessing at which loan to pay. And so the book goes into detail on why that isn't enough, and then points you to our calculator, which is an opportunity cost calculator, knowing the best thing to do with your money, the highest and best use of your money. So the book gets into that. It's the only book on Amazon that helps you to read and understand amortization schedules and how to defeat them. Oh my goodness.
And
This
that
is it.
is not all, you guys. When you purchase the book, you get a 10K card complimentary. And this is how you do that. You purchase the book, you screenshot the receipt, go to ice10klive.com, upload that screenshot receipt to where it says, I'm ready. It's going to be the second link over to the left, 2 slots down. Then you build out your 10K card with your social media outlets, your website, your email address, anything that you want people to know about you. Designate a place for us to send it because it's digital. And in an hour or less, you will receive your own 10K card valued at $100. And you, LaShawn, will get one as well.
Wait a minute. Wait a minute. You're sponsoring her book, and she gets a 10K card. And now the founder of 10K is going to tell Miss LaShawn how valuable that is. 10K, are you in the house? Oh, listen, I gave him a lob. I gave him such a lob.
I'm so excited. I'm so looking
But
forward to this
why
book
CEO?
and
Are
my
you
10K
in the
card.
in the building?
Absolutely, Queen. You know, I am right here looking at double takes of Dawn on the screen. It's very interesting.
Let's
But I
tell
can tell you
LaShawn
all.
why that's such a gift.
Yes, it is, because this room is being sponsored by 10K Cards. It's the authorized digital business card on and off Clubhouse. Get all your links in one place, your website, your social media, plus many ways to connect with your clients, Queen, to make payments for your services and products and register for your conference. We form partnerships with the best brands on the app, like the P.I.L.L Method. Clubhouse earners are making money hand over fist with their brands, their products, and their services, like Don Daniels, like Kenyatta. So what are you waiting for? Make sure you tap into Queen Kenyatta and get yours today through the P.I.L.L Method. Yay!
Listen, folks, I am so grateful to be able to share this information with all of you. Miss LaShawn, are you complete, or do you have an additional question this morning?
I'm complete. I'm so excited. And I so appreciate this. And I stumbled into the room because Seba is a very near and dear friend to me, and she's doing so much, and she's just wonderful powerhouse and brilliant. And I fell back out of the room. She texted me and put me back on Front Street, said, get back in here. And I'm so glad I did.
And you know,
I'm so glad I did. This is so valuable. This is what we need for our legacy, to build our legacies for our families. You're thinking about that next car. That next car could buy your whole house. Don't
mercy.
Get that car note. If you got wheels, use them. Pay your mortgage off.
That's
in 7 years.
Absolutely.
Absolutely.
Thank you.
You are so welcome, and I'm looking forward to seeing you all in Chicago. Listen, because Kenyatta has been to Huntsville, Alabama. That's where I live, and so now I can return the favor and come to Chicago and to see all of you. This would be phenomenal for us. We're looking forward to that. Thank you, Miss LaShawn. Seba, thank you for, listen, this is how wonderful this is. I didn't meet Seba till, this morning in another room, and she didn't know how deeply we get into the subject. On faith, she invited her friend. Come on faith.
Absolutely.
I do believe that's called divine.
Come on, folks. Listen.
Absolutely.
It's all divine.
So Don, I'm going to jump in as as your moderator.
Come on.
Michelle's been waiting for a minute. I
All
want
right.
to make sure Michelle is able to ask your question. But I just want to thank everybody for being in the room. Make sure you follow the greenhouse at the top and follow the P.I.L.L Method Club. Make sure you follow Don. Thank you to 32 people that have shared the room. Keep on clicking that button, sharing the room. And if you want to come on stage, feel free to raise your hand, jump on stage, and we'll answer your question expeditiously. So with that being said, Michelle, thank you so much for coming to the stage. Please let us know your question.
Good morning, everyone. Thank you for allowing me to speak. I did have a question because I do work for a mortgage company right now, and when he was talking about how to avoid paying how to go from paying your principal instead of paying interest monthly. I was wondering, like, because I see plenty of my customers do that, and they do pay an additional principal, or they'll pay the principal balance like twice a month in advance, and it looks like their next payment is still including interest. So when he did, I believe he said that it depends on when you're making that payment.
Mhm.
Is that correct?
That is correct.
Okay. I heard you answer that question, and that was after I came up to the stage. So I just wanted to make sure I heard that correct answer.
All right. So here's what we're doing is when people pay extra, I'm going to use this as an example. Do you, Michelle, do you like to go shopping?
Love it.
Okay. Do you buy stuff off the sale rack, or do you pay retail?
Retail.
I'm sorry?
I pay retail. You said, do I pay retail or do I buy stuff off the clearance rack?
Yeah, the sale. Do you buy stuff on sale?
Oh, of course, all the time.
All the time. Okay. My wife plays that little game with me. She comes home with stuff. She says, "Guess how much I paid for this?" And then I have no idea. And I say, $10. And she says, "No, $1.27." And then I see all the markdowns. I said, "How do you find this stuff?" Okay. And so here's what we're talking about. When you go up to the register and you're checking out all your fabulous finds, what do they print at the bottom of that receipt, Michelle?
Your subtotal, taxes.
How much you saved?
Oh, yes.
Yes.
True.
And why do they do that? Why do they print how much you saved?
So that you can see how much money you saved, right?
Yes. All right. Does it make you feel good?
Yes, it does.
Oh.
It makes you want to go.
It makes
shop
you.
in the same sales rack.
It makes you want to go and come back, doesn't it? All right. So listen, if your department store can figure that out, when you give extra money to the bank, aren't you buying interest savings? Do they ever print on your statement how much interest you saved when you give the bank extra money?
No.
No. And why not? If your department store can do it, if your grocery store can do it, why can't your mortgage, your car loan, or your credit card statement? Why don't they include that information?
Because then you'll notice how much you're saving and you will never pay interest. That makes sense.
That's what we're talking about right there. So it's not enough to pay extra, Miss Michelle. It's knowing how much interest you save when you do. And that's when it becomes real. Okay. If you could pay an extra $200 and save a $900 in interest, that would be real, wouldn't it?
100%.
And that's why, and then if you knew how much interest you were saving, you would come up with some ideas, wouldn't you?
I definitely would.
All right. That's what Ms. LaShawn says. Listen, she said, I got a perfectly good car and I'm going to go out and get another car when that money, if applied correctly to my house, I'd be have my house paid for.
Right.
So listen, if you knew what you were saving, it would make such a difference. This is why we exist. We exist for this reason, because we are supposed to be putting back money. We're supposed to be laying up for an inheritance for our children's children. And how can we do that if we're spending it all on interest, paying 75% more than we need to? And you know what, Miss Michelle, paying the extra interest really isn't the real problem. You know what the real crime is? It's this. The money that money will never make for you because you gave it to the bank so that they can invest it. That is the real crime. That is what's robbing us of our inheritance. That is what's robbing us from passing on generational wealth. It is the interest on the wealth that grows into generational wealth. Oh my goodness. Let's go back to school. Let's get this information. Let's start. Listen, you can buy what you want to buy. You can buy your house. You can buy your education. You can buy your cars. You can do everything you want. And then take the interest savings and invest that into your family. And you can live well and build wealth. That's what we're talking about here in the P.I.L.L method. That's what we're about. Thank you so much for coming to the stage. I appreciate you so very much. All right, Jared, back to you.
All right. Thank you so much for that question, Michelle. And up next, I see Margaret is on the stage. So, Margaret, please let us know what your question is. And Margaret, if you're speaking, oh, there you go.
Yes. Hi to everybody.
Hello.
My name is Margaret, and I have a question because I've been following you guys for a couple of weeks. Because I've been in a mortgage for 4 years, and I've been paying $100 every month, except, and I really don't know what is that $100 doing, but I just paying more to just save myself some time because my mortgage is like 30 years. So when I see you guys talk about mortgage, I've been following you guys on YouTube and Clubhouse to learn something to how to pay my mortgage. Because I know I'm from Africa, from like South Sudan, Africa, and I know a lot of people are struggling for the mortgage. Sometimes they have to take it back to the bank after 10 years, 15 years. And some of them, they do a refinance after 20 years, after 15 years. And I know something not right.
Mm-hmm.
So I'm just glad to be here to learn more.
All right,
I can take it to my community because we've been struggling a lot.
Margaret, would you mind sharing a little bit about your mortgage?
Yes, when I bought my mortgage, I got it in 2019.
Okay.
155.
It was.
I paid 155 for it.
It was one.
The mortgage it was 155,
One.
and I put 25,000 down payment.
Okay, so 155. All right.
Yes.
But you didn't borrow 155.
No, because I put 125 down payment.
So you put down 25.
Yes.
All right, so your mortgage is 130.
Yes.
Okay, so we have 100.
It's down now to 125.
Oh no, I'm going to teach you how to do this, but I have to start from where you started. How's that?
Okay, that's good.
130,000. Okay. At what interest rate?
4.99.
4.99. Okay. And you said it was a 30-year or a 40-year?
30 years.
30-year. Okay. So here's what I'm putting on the screen now is your principal and interest payment should be right around $697.07 in that neighborhood. That's just the principal and interest, not the taxes and insurance added in. Okay. All right. So you're putting down an extra. Okay. And you've been into this loan how long?
4 years.
4 years. So if you had just made the minimum payment, we're going to go down to payment. We're going to go down to line 48, and I'm putting it in the middle of the screen. All right. And this is the problem with these interest rates. We think that a low interest rate really means a low interest cost, but it does not. So at your interest rate, okay, at your interest rate, you have a payment. You would have paid down your loan by $8,294.49 after 48 months, but it would cost $25,000 in interest to do that. That's what we want to attack. It shouldn't have to cost $25,000 to pay off $8,200 of your loan. It shouldn't have to cost that. Now, am I anti-bank? No. What I am is pro education. So when we get these loans, let's be educated about them and give the bank back pennies on the dollar. We're going to leverage their money, but we're going to know the timing and the certain amounts so that we can save the maximum amount of interest per dollar applied. Love the bank. Okay. Had 4 mortgages up to December. I got 3 now. Okay. Paid 1 off. but as soon as I listen, my wife is in Costa Rica right now, sending me pictures of a brand new gated community over there. And guess what? We may have a new mortgage, and guess what? We're going to get it for the longest term possible, and we're going to save interest on those payments. Okay, I'm going to put the least amount down that I possibly can, and then take any extra monies I could have put down as a down payment and use it to knock off principal and save interest. Never, ever, 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 ever put a large down payment on a loan. Just don't do it. If you were in this room earlier, you would see why. Okay, so here's what we're talking about now. So do you see, if now you've been in our rooms several times, you know what we're talking about when we're talking about prepaying this money. Here is what I want to show you right now. Some people, because of this interest rate of 4.99, okay, that's just under 5%. And when you have a 5% loan, the bank wants 93% of the principal borrowed, which means on a $130,000 loan, they want $120,945.20 in interest. 5%, folks, is not 5% by the time amortization gets done with this. It's 93% of what you borrowed. Okay, what can we do about this? Now, here's what I love about your 5% loan. Margaret, I'm telling you right now, I love your loan. And you're going to say, Don, why do you love my loan? You can go ahead and say it. Because it is 5%. Because you have, look at your principal payments here. If we go down to even, line 48, your principal payment is $190.19 on line 48. Your principal payment is $190, and your interest payment is $506.88, and you still owe right around $121,000. Okay. Now, most people refinance at about this point. Okay. They between 5 and 7 years, they refinance these loans. All right. After they've paid out, in this case, about $25,000 in interest, now we're going to refinance and go back to a brand new 30-year loan. So, but what we're not looking at is if we've already entered this loan 5 years and we refinance, now it's a 35-year loan. And if we refinance 5 to 7 years later, now it's a 40 or 42-year loan. We're not looking at it that way. The way we do loans here, okay, refinancing is part of the cycle. And let me ask you something, folks. If by refinancing, if you're saving money, that would mean the bank would have to be losing money. And I guarantee you, they're not losing. You just need to find out what's in it for them. Okay. So now let's take a look at refinancing this loan. Okay. So I'm going to put here, I'm going to copy this, and I want to show you something. So if we had 5.99, 4.99, and then somebody says, you know what, with your credit score, you could get 2.99. Oh, folks, do you know how many people are in the audience right now saying, if I had 4.99 and I could refi this thing at 2.99, people would jump on that thing with both feet. Folks, I'm getting ready to show you what happens when you do this. All right. Now, what am I saying? Never refinance? I am not saying that. What I am saying is you need to know what your what your goal is. If your goal is to save money and to get out of debt faster, generally refinancing doesn't do that for you. All right, generally. So you need to know why you're refinancing, and there's certain reasons to refinance, and it's a good thing. There's certain reasons, it's a certain thing when you refinance, it's not a good thing because it doesn't actually save you money. It actually doesn't get you out of debt, because those people who are chasing a lower interest rate, they're actually hurting themselves. Stop chasing a lower interest rate. You want to manage interest cost. Know how much it's going to cost you to manage your debt and make a decision on that. Meaning somebody has to do the math. Don't just look at a smaller payment. Don't just look at a lower interest rate, but do the math. How much is it going to cost me to pay this loan off? And when you do that, you will come up with the right answer for yourself. So now we're at 121,507. Okay, we're going to copy that. Going to duplicate this tab, bring this up. We're going to put in how much we have, paste that. Take the, you always have to take the comma out. All right. And now we're going to put it in at 2.99. Oops. 2.99. That's our, and a new 360 payments. We were at $697.07, and now we're at $512.46. So we're paying less in interest. I want to go back here. I want to make sure that we know what our principal payment is. Okay, I want to show you this before I go into this other loan. If we wanted to prepay on this loan, and I'm just picking a number out, let's say we wanted to prepay the principal payment on line 49. That would be $190.89. Okay. If we prepay that, we get rid of one line on our amortization schedule. We skip this 506 in interest. We don't have to pay that. And now we're on line 50 for the next month. Okay, where we're paying $191.77. So for $190, we get rid of one line on our schedule. Does that make sense, Miss Margaret? Okay, I think she's still there.
Yes. It's
Okay.
like
So,
5%.
all right, good. So we would save we would knock out one payment for $190. Now we're just refinanced to 2.99. Okay. And we're at the same point, 121,705.51. Look at our principal payment now. It's 209.21. And to eliminate line 2, it would cost us $209.73. I'm going to go back to where you were, where it only cost you $190 to get rid of one line. And when you refinance to a lower interest rate, now it costs $209.73. Folks, in case you didn't know it, when you lower the interest rate, you actually make it harder to pay the loan off faster by accelerating how much money you put on principal. I'll say it one more time. When you refinance to a lower interest rate, you make it harder to pay the loan off faster. The people who own the bank know this. The people who work for the bank do not realize this. So don't blame them. They're not being taught this. If you're in this room right now and sharing this room with others, you know more about this particular subject of what happens when you refi. Okay. And then the person that actually sold you the refinance. Look at this, understand this. Now we're going to go to one other thing that I left out. When you refinance, generally it's going to cost you something to closing costs. So now we're at 121,000 So the refinances usually cost somewhere between 8 and 10 grand. I'm just going to make it easy and make it just 10 grand. So instead of 131,000, 121,000, it's 131,000. Now watch your 512.46. It doesn't raise it that much. 512.46, goes to 554. Okay. So now we have that $10,000 in there, 2.99. And here we go. Look at this. Watch this. Because we have refinanced and we roll in the closing costs into the loan, we're actually wrapping a loan up inside another loan. What you're asking the bank to do is, I want to borrow the $10,000. And you're thinking, I'm doing it at 2.99%. Why not just roll it in so I'm not taking it out of pocket? So, which means you have to pay back the first $10,000 before you get back to your original amount that you borrowed, correct? Watch what happens when we do that. So now, if people are wanting to see this, Miss Kenyatta, can you invite them one more time? Because we got some new people in the room. They want to see what happens when you roll in the $10,000 into this loan, what actually happens. So let's invite the new people in.
Hi, new people. What you want to do is go to ice10klive.com. That's ice10klive.com. And then you want to choose between Facebook, LinkedIn, Twitter, or YouTube to view these examples. But don't stop there. Go ahead and share the information, please, and thank you.
All right, folks, share this information. I got 34 shares. This is powerful information here. And I'm getting ready to show you something that most people don't realize, even if they have perfect credit. Now, you don't get a 2.99 interest rate without perfect credit. You got to be in really good shape to get 2.99. Okay. Watch what happens when we roll in the fee at 2.99. And I want you to watch this. Now, cumulative principal is how much principal you pay down in 1 year. Okay. In 1 year, this is how much principal you pay down. $2,754.39. That's $2,700 of the $10,000, not your original principal you had when you refinanced this loan. We're still trying to pay down the first $10,000, which are the closing fees on this thing. So in the first year, you only pay off $2,700 of the closing fee. Look how much interest you paid on that already. $3,900. Has anybody, if you've refinanced, has anybody ever pointed this out to you? $2,700 of the fee you just paid off, and it cost you $3,900 in interest at 2.99. Okay. Year two, you've only paid off $5,500. Year three, only $8,500. And finally, 42 months in, you finally pay off the 10 grand in closing fees, because we were so happy to get the lower interest rate and the lower payment. We didn't stop to calculate the interest cost on this loan because we are taught to ignore it. We are taught not to pay attention to it. It's called inattentional blindness. Look it up. Inattentional blindness. When you're blind to what you don't pay attention to, even though it's right there in front of us. We're taught not to count the cost. And what happens here, folks? By the time we pay this off, you know what I call this? I call it how not to pay on your mortgage for 42 months and still keep your home. Because all we did was pay down on the closing costs. And it cost $13,280.73 at 2.99 to borrow $10,000. If your bank came to you and said, I have a deal for you. You can borrow $10,000 from us And you can have it for 42 months. All you need to do is pay us $13,280.73 in interest on that loan. You would never sign that paper. But because it's wrapped up in a mortgage, we don't see it and we sign up for it every day. This is going on right now, every day of the week. And people are signing up for this. So here's the last part. If you borrow $1 from me and I say pay me back $2, then you would say, Don, I don't want to borrow from you because you're charging 100% interest. If you borrow $10,000 from the bank and you pay back that money and an additional $10,000 in interest, folks, isn't that 100% interest? And if you're paying back $13,000, isn't that 130% interest on a loan? People with perfect credit often pay 100 to 150% interest on these kinds of loans, and they don't even realize it. Why do you think that they never ask you to pay it out of pocket? They never, ever ask you to pay it out of pocket. They always recommend that you wrap it up in the loan. And this is why. Okay, I'm off my soapbox.
I'm traumatized. I only found one exception on the internet, and that's if you go to a sheriff sale and buy a house. You have to pay cash. That's the only one I found.
Come on. Jared, back to you, sir. Do we have any do we have any comments, anything? People on the stage, where are we going next? My goodness.
All right, so I'm going to check with Kirk real quick just to see, is there any comments or questions from the chat? Kirk, you there?
Yeah, he's here now.
Okay. All right. So Lisa, I saw you.
You're muted, Kirk. You're muted.
We just have one comment online, and it's from LaShawn.
Okay.
She was in the room earlier, and I don't think she's asking a question, more just asking or just commenting on what was being shared.
Mm-hmm. Right, and let's put it on the screen. So she says, "Wow, this is eye-opening. Now I have a plan for my clients." And oh my goodness. So this is wow. This is enlightening, particularly as we jumped interest rates and another hike coming next month. Oh, this is what we're talking about, Miss LaShawn. Listen, don't be afraid at the hike in interest rates, because if you know what to do, that hike in interest rate is going to be your best friend. Mm-hmm. We're going to show you how a hike in interest rates is actually going to work better for you. Oh my goodness. Isn't this good to have this information now as we're going into this inflationary period? Now we can benefit from a higher interest rate when you know how.
Absolutely.
Come on.
All right. Well, we have two questions on stage, and I know we only have about 35 minutes left. So just wanted to make sure before I jump to the questions or comments on stage that I checked in with Kirk. But with that being said, Gustavo, thank you for coming up. Please let us know what your question is.
Hey, my question here is, I have a mortgage, which is about $250,000 at an interest rate of 2.34. I decided to accelerate it so I can pay it faster. I'm really putting a lot of money in. A weekly payment of $750.
Okay, so I've got.
My question is.
So I got 200. Gustavo, I got 250,000 at 2.55. You said.
2.34.
2.34. I'm sorry. 2.34. All right. It's a 30-year loan.
It's a 25-year loan.
25-year loan. Are you in Canada?
Yes.
Okay. All right. That's why. All right. 25-year loan. All right. And that's 300 payments. Got it. All right. And you're putting a little extra down. And you said how much?
So I'm doing it a weekly payment
Mm-hmm.
at $750 a week.
Mm-hmm. Okay, $750 a week.
Yeah.
Now, here's what I'm asking you because we don't have that system here in the U.S. for the most part. Do you have what's called an offset mortgage, where putting money into a savings account actually brings down the principal on your loan?
I could put in extra money on the principal.
Right. But is it tied to a savings account? That's what I'm asking.
No.
Okay, good. Go ahead. I just want to make sure I know which loan we're talking about. So go ahead with your question now.
Yeah, so the question is, should I continue this in the same manner, or is there something differently I could do to pay this mortgage off faster and save the interest?
All right, here's what we're talking about. Because of your loan, and now another thing, I'm using this amortization schedule, folks, and just because I'm going to get back channeled or we're going to get emailed, how Canadians do their mortgages, they compound bi-yearly. So every 6 months they compound. American mortgages compound monthly. So an American mortgage is slightly more expensive with the same interest rate. Okay, and so that's going to be basically but the principal here is going to be the same, so that people will know. All right, so here's what we're talking about. So once you give your money, you want to make sure you are saving the most per dollar applied. And I'm going to give a couple of examples here. All right, just to have an idea so people can know what we're talking about. If we take, I'm looking at a year's worth of principal, which is $7,447.54, and the interest on that is $5,770.46. So we can actually find out, if we prepay a certain amount, how much interest we're saving per dollar. Okay, so before we get into this deeply, let me ask you a couple of questions. Will that be okay?
Yeah.
Okay, Gustavo. So if your loans were all 0% interest, would there be any benefit to paying off your loan early if it was 0% interest?
No.
No. Okay. So here's what we're talking about. So the reason why we're paying off a loan, folks, is not to see how fast we can pay it off. We want to attack the problem, because if it was just the principal, all of his money paid would go to principal. But right now, too much of his money that he's paying goes to interest. We want to cut out as much interest as possible. So if the best loan to have is a 0% interest loan, the next best loan to have is to pay as little interest as mathematically possible for you. Wouldn't that be the case? All right. So now, how do we do that? We're going to drill down just a little bit deeper and say we don't want to just save some interest. We want to save the most interest we can. And there is a point at which, on anything, where more is too much. Okay, we're going to get to the point where we don't want to violate the law of diminishing returns. So I'm going to put on here, I've got a calculator on the screen, and we're just going to do just one example of this. We've got an interest cost of $570. I'm sorry, $5,770. $5,770.46 for the year. Okay. Now we have a principal payment of $7,447.54. So if we were to prepay that, we see how much interest we could save. So let's figure out how much interest we're saving per dollar. So we're going to take this, we're going to prepay this We're going to divide it by the 7,447.54. That tells us at this rate, we're saving about 77 cents in interest for every dollar applied. 77 cents in interest for every dollar applied. Let's say that's the most we could save. All right, so if I go down to line 24 and we prepay, let's say money is not is no object, we could prepay the 15,000 and then save 11,364. And most people would look at that and say, well, listen, if I could afford it, why don't I just knock out 24 payments at once? So we're at 77 cents per dollar. So let's take the 11,364.77 and divide it by $15,071.23 equals, now we're saving 75 cents instead of 77 cents. Now, when we're looking at this thing overall, we want to find out, Gustavo, when I'm putting my money on the debt, am I saving the maximum amount of interest per dollar? Or am I putting too much on at the wrong time and hurting myself by violating the law of diminished return? When I violate the law of diminished return, that begins to tell us we're putting too much money into debt reduction, and we should be putting some of that money into wealth creation. There's a certain point at which we want to put the right amount of money into debt elimination and saving interest, and putting any other monies we have into some sort of investment so that we can create wealth through compound interest. But if we're focused on one or the other, we're going to miss an opportunity. Does that make sense, Gustavo?
Absolutely.
So we will help you with our system. We do all of the math. We just plug it in, and our program tells us how much interest we're saving per dollar, or how much interest we're supposed to pay overall. And then we can figure out, when is that critical point? We're going to do some critical point analysis and find out what is the least amount of money you can pay to save the most amount of interest that we possibly can. And in our system, the P.I.L.L method opportunity cost calculator, all we have to do is flip one switch, click on one button, and we go from an American mortgage over to a Canadian mortgage, and all of your numbers will be correct. So how do you get that? Just go to ICE10KLive.com. That stands for Interest Cancellation Expert. ICE10KLive.com. And you'll see a button there that says Get a Savings and Earnings Report. Put in your financial data once you follow all of the directions there. Put in your financial data, and you can know the month and year you could be debt-free and how much interest you're going to save. And Gustavo, instead of putting money on the debt every month, some months you're just going to pay the minimum payment. Any extra monies you're going to put in your savings account. The program will do the math and determine when money should be pulled out of savings and put towards the debt. And we're going to tell you how much to the penny. Now, I also know that you guys got rid of your pennies. So let's say to the loony. Okay. How's that, Gustavo?
That's fine.
All right. Any other questions, sir?
No, that's good. Thank you.
You're so welcome. You're so welcome. Kirk, Jared, back to you.
All right. All right. Again, thank you everybody for being in this room. Make sure you follow Don. He does rooms in this club, but he also does rooms outside the club. So if you want to be aware of when he's on another real estate or financial literacy stage, you want to go ahead and click that follow button and click that bell next to the follow button and choose the always on option. Also, make sure you click that greenhouse follow the club. And then I highly recommend reading the bios of every single moderator, from Kenyatta to Tiffany, the Credit Goddess, to Saba, to Melissa, 10K Cards, Arnez, and Lisa, and Kirk. And I would highly recommend giving them all a follow. You're always curated by who you follow. And if you want to see some great content on Clubhouse, make sure that you're following them, checking out their replays, and be sure to share the replays from today's room and past rooms to your friends and family so that they can be aware of this method and how it can impact their interest cost savings. So up next, we're going to go with Sasha. Thank you so much for coming to the stage.
Hey, good morning. I am sitting here kind of kicking myself at the moment because a couple of years ago, I did the refi to a 15-year, and now I'm learning that that was a mistake, right? So I guess I'm wondering at this point, what do I do? Yeah, I guess that's the question.
All right. So what we do is we take a page out of that poem, that line that says, once we know better, we do better. So we're going to take your loan right from where it is now and make the most of it. Because whatever you're doing now, we can determine how much interest you have left to pay. And then we can figure out whether it makes sense to attack that loan aggressively and to see how much interest we can save with your current situation. And Sasha, may I also point out because you brought this up to everybody on the stage, even if you didn't know the P.I.L.L method, you don't need permission to have a 15-year payment. So I'm going to go here. I'm going to put this on the screen, okay? And we have 130,000 at 4.99, okay, on the screen right now, 130,000. And we can get a simple calculator, even online, all right? And then we would put in 180 payments instead. And this would tell us what our 15-year payment would be $1,027.35. So Sasha, for all of the people that you're going to meet in the future, even if they don't want to work with the P.I.L.L method, you can tell them you don't need permission to get a 15-year payment. You can start making it now based on how much you have left, put it in an amortization calculator, and it'll tell you what the 15-year payment is. The best thing about that is if you start making the 15-year payment on your 30-year loan, if things get a little tight, you can always drop back to the 30-year payment schedule. But if you refinance to a 15-year loan and things get tight, you're stuck. I mean, you're right there. There's nothing you can do except maybe try to refi again. So that's kind of what we're talking about as far as the 15-year loan versus a 30. We promote getting a 30-year loan or a 40-year loan and paying it off in 7 to 9 years, because we look at how much you actually owe. So Sasha, it could be, depending on when you started this process, you could still save a significant amount of interest, gaining equity 5 times faster at a much lower interest cost, even in a 15-year loan. Now, you're going to save so much money on this loan that you're going to say, shoot, let me go ahead and buy another house. And when you do, it'll be a 30. And we're going to save you a ton on that one. What do you say?
I love it. I love it. So next thing you mentioned, so go to 10K ICE 10K live, right?
Yep.
And do the do that form and get it with you like that, right?
That is correct. And then someone from my staff will give you a call and we'll set up a consultation, and then we'll go from there and see where you are. And I tell you what, it'll either make sense or it won't. And you'll see the numbers. There won't be anybody there trying to sell you a doggone thing. What they'll say is, do you want to keep doing what you're doing, or do you want to save this much interest in this much time using your current budget? And then you decide whether you want to come and do business with us.
All right, sounds good to me.
All right, Sasha, thank you so much for bringing your question to the stage.
Thank you, appreciate it.
Certainly. All right, who's next?
All right, so it doesn't look like we have any more questions on the stage. But Lisa, I saw you flashing your mic earlier. Did you want to make a comment? Is this your first time here in this room? And if so, what are your thoughts?
This is my first time processing this much information. I'm thinking about the VA loan that we got for the house that we are in, that we got last July, and the interest rate that we thought was good. So now I got to pull out some paperwork and figure things out, because we haven't been in it for a year yet. So we don't really have any mobility that I know of right now. So it's a good time to do evaluations to see what we need to do. And just getting into the loan business now this is information that I need to understand. I'm actually looking at which episode this is and thinking about how much I need to go back and learn. So I love this room and the great, it's just solid information after information. So I will definitely be a regular in here and just continue to grow and learn. So thank you so much.
That's my sister from 10X and the play.
Oh my goodness. Listen, Lisa, thank you. Go ahead. I didn't mean to cut you off.
No, I was just giving my love to Tiffany. That's my girl. Thank you.
Oh, listen, connections being made on and off the app. I mean, we get into learning so much, and actually the P.I.L.L method is a graduate of the play as well. And so being a business purpose lender and helping people to save on their interest cost after the fact, I love it. But guess what? If you have a loan and you bring it to this stage, I can't do that loan for you. You know why? Because we have someone in here who is the designated, who is the person who is the official lender in the P.I.L.L method room, and that's Miss Kenyatta. So
hi everyone, nice to meet everyone.
So listen, folks, if you have a loan and you come bring it in this room, you can't send it to me. All right. You have to work with the official lender. And I'm going to be talking to, now she doesn't know this. This is going to be a surprise. Miss Credit Goddess, are you in the room?
Yes, I am.
All right. Do you know that the P.I.L.L method room is in need of the official person who can help people restore and improve their credit score and credit profile? Do you know we're in need of somebody that's an official person that can do that?
No, I don't know. Explain.
Okay, well, we're looking for somebody that can do that, and just like when the president looks at, listen, how many people are there on the short list for the Supreme Court? All right, and Miss Credit Goddess, you are on our short list. In fact, there's only one name on our list, and it's yours. So I don't mean to put you on the spot, Miss Credit Goddess, but I am. You know, it's just one of those things where you propose and you're on TV and you hope they say yes. So would you be the official person who does credit restoration and improvement on for the P.I.L.L method club?
It will be an honor, Don.
All right. So all that business goes to you, Miss Credit Goddess. I don't care who else shows up on the stage. It belongs to you. All right. So thank you so very much for saying yes. Listen, folks, we're trying to curate a stage here that can be a one-stop shop so that you get a lot of good information. And I've talked to Credit Goddess on and off the app, just like I did with Kenyatta on and off the app, and they know what they're talking about. They're fully endorsed by the P.I.L.L method. So and we have somebody who is the official business card, digital business card company here, and that's 10K cards as well. And is 10K back in the building?
Of course, 10K back in the building. You're like the warrior on the battlefield right now. Who's up next?
So listen, man, you weren't here when I threw you a lob before because you're always so busy. Tell us why 10K cards are so important, man.
When you're surrounded by great team members, if you don't see me, you see Tiffany, I promise you 10K is well represented. Make no mistake about it. That Jared, I heard Jared does a really good impersonation of me as well.
I mean, listen, they filled in for you, 10K. I want you to know Jared is always there. We got a Y CEO. She does a marvelous job of talking about the 10K card. But so we want to thank you for having such a valuable product that is a game changer, folks. This thing is when you talk about disruptive technology, this is it. And not only is the technology disruptive, so is the customer service. You can't, it is so good. It's almost as good as Pill Method customer service. Almost. It is that good. All right, Jared, back to you, sir.
Sleep at night.
All right, so Don, how is your Sunday looking? Do you have a hard stop in 13 minutes? If so, then we can do final book conversation and then outros. But if you want to try to squeeze in another example, we can try to do that as well.
Listen, if there is a question, I will take that question. But we do have a hard stop. But if there is a question, I'll take it.
There are no questions. So
okay.
Don, you were talking about the 10K card.
Yes.
Please tell everybody about the partnership you have with your book.
Listen, folks, the book. I want to tell you right now, I'll take just a little bit of time. The book is actually a miracle in and of itself. Well, just a few years ago, when I moved to Huntsville, Alabama, I found out that I was ADD. I got tested. I have ADD and I have Asperger's, which is a high functioning form of autism. So I'm autistic and I have Asperger's. I didn't read my first book all the way through until I was 46 years old. Okay. And when finding this out, now to actually write a book, that was the furthest thing from my mind. So the book in and of itself is a miracle. Somebody said, Don, with the information that you're providing, you need to write the book. So we got the book written. It took a year to get it done, but it was that we got it done. It is the only book of its kind out of 33 million titles on Amazon. It's the only book of its kind, which means how to understand amortization schedules and how to defeat them. The only book that goes into that kind of detail. Some of the things that you heard on the stage today contained in this book. Get the book today. Start sharing it with family and friends today. All right. And then get a 10K card that goes along with it. And 10K, why should they even think about getting the book and a 10K card? Talk about that collaboration we have.
I mean, Don, you put out a lot of videos out there.
Yes.
They go to ice10kvideos.com. They'll see all the video, all the streaming, all the recordings, no problem. But there are some people who like to read the book, and it's a very small read, by the way. It's a simple book, guys, a very thin book. So they can literally not only cross-reference what they're hearing, but they can read it so they can understand it on a much deeper level. They can also use the book as a future cross-referencing point. So if there's any question that they want to clear up, they can always go back to the book and select any chapter that best serves them. So after you become very aware as to how the P.I.L.L method can help you, now you want to go out there and basically crush it. You want to crush the marketplace. And by doing so, by having a 10K card, it's a simple way to put all of your contact points in one place. Website, social media, your phone number, your email, your calendar, any link that you want to share with your client, you put it all in your 10K card, guys, and make sure your information very seamless and flawless. Now, be sure to fill out the savings and earnings report, guys. As much as I would love to see you guys get the book and get the card, if you don't fill out your savings and earnings report, the GPS cannot pick up where you currently stand. And in order for us to get you to your desired destination as fast as possible, we need you to fill out the savings and earnings report. So step one, get the book. Step two, fill out the savings and earnings report. And then step three, claim your digital business card. And then you'll be on the way to paradise. Now, for the most advanced team members on stage or in the audience, if you want to actually earn some extra income using your 10K card, guys, definitely get the upgrade. With the upgrade, you're going to earn 20% commission every time someone purchases a card because of you. And guess what? You can take that 20% and put it towards your mortgage payment. So paying off your loan in 7 to 9 years become much quicker, and possibly we're looking to shoot for 6 to 7 years. So if we can achieve that with one client for 2022, 2023 will be something to look forward to. With that said, Don, back to you.
Thank you so much for that 10K. Listen, it's a phenomenal product, folks. Let's get it. And we've already paid for a bunch of these for you guys. So once you get the book, your 10K card is paid for, sponsored by the P.I.L.L Method. All right, Jared, let's go ahead and do some outros here today. And thank you so much. This is the fastest 2 hours on Clubhouse and on our streaming services, folks. I have so much fun doing this. And I'm looking for you to be right back here tomorrow morning at 8 a.m. Eastern time so we can do it all over again. Jared, back to you, sir.
All right. So yeah, also if you're not following Dawn on YouTube, Facebook, LinkedIn, or Twitter, you can use the link above our head, ice10klive.com, and you can follow, subscribe, share, like, all that stuff, comment, get engaged, share this information with as many people as possible, and check out his other platforms where he curates community in a different way than he does on Clubhouse. All right, so we're gonna go through moderator outros. Definitely recommend following every moderator you hear speak. And yeah, let's try to keep the outros with 30 seconds, and we can maybe get out on time by 10:30. So Lisa,
hey Jared, I forgot one thing. We've got a focus here. We're also trying to grow our viewership on YouTube right now. So we do have another link, which is ICE10K videos, ice10kvideos.com. That would take you straight to our YouTube channel. Please subscribe. We would appreciate it very much, along with following us here on Clubhouse. Thank you so much. Go ahead, Jared.
All right, I updated the link above to ICE10K video, so let's blow that up and get 60 more subscribers. But Lisa, go ahead and jump in and give a quick outro.
Hey, thank you. I am Lisa Martin. I am in the technology world, and I am transitioning as I'm a management consultant for utility companies, and I am transitioning into real estate and commercial loans. I have a million things going on and a million things to learn, but I love everybody in this room. I have my 10K cards, and I'm taking them to GrowthCon, and I was born in Huntsville, Alabama, so I have a lot of love going on in this room. And it's just great to be a part of it. And I hope to be able to add a lot of value going forward. And thanks, guys.
All right, Arnez, are you around?
Yeah, I'm here. All right. Yeah, I'm Arnez. I'm a personal credit and business credit expert, financial strategist, and overall, I've helped over 1,000 people achieve their goals and dreams through the platforms of personal credit and business credit, as in opening businesses, scaling businesses, buying houses, cars, etc. You can schedule a consultation, free 15-minute consultation in the link in my bio. Yes, and just follow me on all social media platforms. Thank you.
All right, 10K, are you around? And for everybody on the stage, just look for your time. We're just gonna go PTR order in reverse.
You got it. Hey, it's some good guys. It's always a pleasure spending time here with family and with people. And if you do one thing today, make sure you take some action based on the information you heard here today, or share it with someone you know that can actually become inspired and motivated by doing something with the information here shared today. The link that I want everyone to basically check out is ice10kvideos.com, ice10kvideos.com. Give Don a subscribe and check out all the list of his videos over there. Also, share it with any family members that will find benefit in it. And if you don't already have a 10K card, guys, just hit me up in the back channel. Let's have the team help you with that and get the book. With that said, off to you, Melissa.
Oh, thanks.
Queen,
Sorry,
my bad, Queen Melissa.
I love it, Sean. I love it. Thanks so much for passing it on to me. You all, I didn't mention this when we were doing our introductions, but so I am the CEO and visionary of Living Healed Ministries. That's what I do in ministry. However, I am a vice president in banking in the marketplace. So what Don shared today, it is on point, Don. That was on point. I've been in this industry for over 22 years, and I understand how it works. And you are on point, my brother. So thanks so much for sharing that valuable information. And you all, like he said, go out and invest in yourself. I'm telling you, it will transform not only your life, but your children's lives, your grandchildren's lives, your great grandchildren's lives. So, you know, we're supposed to leave wealth to our heirs. So go ahead and do that. And then, of course, y'all, I'm telling you, you will love working with Sean. And go ahead and get that 10K card. So thank you so much again for this room. And my name is Melissa, and I yield the mic.
All right, Saba.
Okay. Well, once again, good morning, brothers and sisters, or good afternoon, wherever you may be. I'm grateful to have been here. You know, there's always something about perfect divine order, and running across Don this morning, hearing him speak, and then just being able to connect the dots back with LaShawn, and going in the clubhouse streets this morning, in and out with everybody, has been phenomenal. I've learned so much. I look forward to grabbing the book. As far as me, I am the senior celebrity publicist of Black and Brown Hollywood. My agency is the PR and Arts Agency. We represent a lot of the stars you know today. And we're up for 5 Grammys for the Donda album currently. So just always here to serve. And if you know me, find me in the 413-338 Pacific Standard Time every morning for our World Leadership Call. Thanks and have a blessed day.
Awesome. It's always a good room, always goes very fast, and excited to be able to serve as your producer for this space, right? So not on the money side of things, but kind of on the money side of things, because getting your message out there helps you with increasing the opportunities that come your way to be able to make money, to be able to solve people's problems, be able to show what you have to offer, the solutions you have to offer to a broader audience. Live video can do that for you, for your business, for your passion project, for your side hustle, or for your main hustle, right? It could be for your actual job, or just establishing you as a thought leader, creating multiple streams of referral-based income. All of those things are possible with live video. And I love working with Don and the P.I.L.L Method team. It's just amazing to be in this space. Happy to be able to serve as producer to get this message out there to a broader audience. If you're interested in doing something like that for yourself and for your brand and for your message, tap in with me at kirk10klive.com. kirk10klive.com. Thank you, everybody. Credit Goddess, passing it to you.
Thank you, Kirk. Thank you, Kirk. Hey, what's going on, everyone? My name is Rose Laura Lewis, also known as Credit Goddess, now the official credit expert for the P.I.L.L Method channel. Thank you guys so much. And thank you, Don, for the opportunity. I appreciate you. If anyone is interested in my services, definitely tap in at creditgoddess10k.com. That's creditgoddess10k.com. Preferably, I prefer that you guys book a consultation with me. So that way I can dive deep into your credit situation and tell you exactly what you need to do to improve your credit. It's just like going to a doctor. If you are experiencing some type of symptom, it's best that they look at your x-ray, your medical record, MRI, whatever they need to do to kind of give you the right diagnosis and give you the right prescription for the symptoms that you're experiencing. That is best for me to help you. I'm a credit consultant. I help you and I coach you. So that's very, very important. So if any of you guys are interested in looking at that service, you can ping me if you guys don't know where to go for that consultation, and I'll do just that. I'm also a business credit expert as well. So if any of you guys are looking for lines of credit or getting your business credit established, definitely tap in with me. I appreciate you guys for spending the time with us this Sunday. We'll see you guys tomorrow. Thank you.
New member on the team.
Right.
I like the girly ones. I love the girly ones because we're queens. Hey guys, I'm Tiffany, the wise CEO. Someone asked me during our class, and they called me on my phone, and they said, "How did you get into this space?" And I said, "Well, I changed a state law. I changed the law in the great state of Ohio at the Supreme Court level. And y'all know we got the first nominee as the first Black female nominee to the Supreme Court. And I'm trying to hold on to my seat. But I am here to let you know that as borrowers, you too can master your finances in a way that does not make you feel less than, but greater than. And I see the largest bank in America and won. And that part will never, ever, it'll probably be written on my gravestone. I am a high net worth multi-use commercial property space developer. I work on a massive team. I'm the compliance person. I'm the one that makes sure you color within the lines and don't get too far outside of that. That's me. I've been doing that over 20 years. I've led teams and I love what I do. I love people. I'm here to tell you that keep coming back to this space because you too will change your world and change your life. And if you need funding for your property, tap into Queen Kenyatta, because what we do here is we support each other. We don't compete because the pie is infinite. Okay, I want to make sure y'all hear that from me. The pie is infinite. So I'm also a certified commercial lender, and I have a huge book of people that I will be tapping into for funding now. And I'm here to tell you that this room, Don, the man with the plan, has helped change a lot of our lives and impacted us in such a positive way. So keep coming back. We love to see you guys. I'm Tiffany, the YCEO. You can find me at yceo.com.
As always, we appreciate your presence and pray that we've earned the privilege of your time. I am Kenyatta. Again, you can find me at kenyatta10k.com. And all you really need to know about me is I'm here for you. So whether that's to find a deal, finance that deal, help you with business, financing, or cancel the interest on that loan that you have, then I'm your girl. Till next time, which is tomorrow.
Yeah, hey, what's up, everybody? My name is Jared. If you're on Clubhouse, click on my bio, check out my replays. I do a lot of stuff in the tech space, metaverse, NFTs, crypto. Also do rooms on mindset, government contracts, anything that's about generational wealth or personal development. So if you'd like to see more rooms like that, feel free to check out my bio, check out my replays. And then also, if you want to check me out on Twitter Spaces, I've been growing pretty fast over there, doing a lot of rooms around tech and the metaverse, etc. So that being said, Don, give you the final word to close it out.
Thank you so much, everyone. Everybody on the stage. Listen, we have a phenomenal talent on the stage. And even though Kurt has been here every day for a while now, we will soon be probably as of tomorrow be asking him to be the official, what are we going to call, what is it that you do? What can we call that, Kurt? So we can say, listen, you are the official it. Okay.
Producer, sure. Producer. Yeah.
The
we'll
producer. All right. We're going to be asking you tomorrow to be the official video producer, live streaming expert on this platform in the P.I.L.L Method room.
Love it.
Listen,
love it.
We're only bringing the best, folks. We're only bringing the best. And Kurt has proved his worth. He is the best in this space. All right. That's what we're talking about, bringing that to you. We're going to be right back here tomorrow morning. I want to thank you. Listen, a couple of things. Please go to ice10kvideos.com. That will take you to our YouTube channel and subscribe. We appreciate that very much. And please follow me and follow the club so you'll know whenever we're doing something, you will know it. I get invited to a lot of stages. I got invited to another one today. So if time permits, I will be there. And if you're following me, you will know that. And listen, who knows what questions are going to be asked, and who knows what information you did not know will be provided at that time. You do not want to miss it. Thank you again for being here. You could have been anywhere else, but you chose to spend your time with us. We so appreciate it. Be back here tomorrow morning at 8 a.m. Eastern Time. Thank you very much. And Kurt Nugent, take us out.